Thanks for joining us for the Purdue University-CME Group Ag Economy Barometer survey results from November 2025. I'm James Mintert, Professor Emeritus in the Department of Ag Economics here at Purdue, and I'm going to share with you the highlights of this month's survey. The Ag Economy Barometer index rose 10 points to a reading of 139, but that still leaves the index 19 points lower than it was in May, which was the index's high point so far in 2025. Current condition index fell 2 points to a reading of 128. That leaves the November current condition index 18 points below the 2025 peak of 146 back in May. The Farm Financial Performance Index rose 14 points in November to 92, taking the index back near where it was in late summer. The Farm Capital Investment Index fell 6 points to a reading of 56. The percentage of respondents who chose good times fell to 16%. That's down from 24% who chose that in October, while the percentage who chose a bad time to make investments fell 2 points to a reading of 60. This month's survey included a question that said, if a trade war leads to lower prices for U.S. ag products, how likely do you think it is that farmers will receive compensation similar to 2019's market facilitation program? The percentage of farmers who overall think it's likely or very likely declined slightly to 76%, down from 83% when we asked the same question in September. But there was a big change with respect to the percentage who think it's very likely versus likely. In September, 62% thought a MFP payment was very likely. This month, that was down to just 16%. Follow-up question asked, if USDA provides an MFP payment to compensate for wheat commodity prices, what will be the principal use of this payment on your farm? And a majority of the producers in our surveys, both in November and in October, said that they expect to use that to pay down debt. This month, that was 58% of the respondents in the survey, compared to 52% last month. The short-term farmland value expectation index at 116 was 3 points higher than a month earlier. And that's the second month in a row that index has gone up, and the index is now 10 points higher than it was back in September. The long-term farmland value expectation index at 165 was up 4 points compared to a month ago, and that's a new record high for the long-term farmland value expectation index. This month's survey also included a question asking producers what their expectations are for cash rental rates in their area in 2026. A majority, 74% of the respondents in this month's survey, said they expect to see cash rental rates hold the same with last year. That's about the same response we received back in both July and August. This month's survey asked producers what changes, if any, they might make in response to low corn prices with respect to their production practices. 39% of the respondents in this month's survey said they wouldn't make any changes at all, but among those who said they are likely to make a change, the two most commonly chosen items were adopt lower cost seed traits and reduce phosphorus rates. In a question we've been asking since the spring, do you expect the increased use of tariffs by the United States to strengthen or weaken the U.S. ag economy in the long run? And a majority of respondents still think that the U.S.'s tariff policies will be beneficial in the long run, but the percentage of producers who are uncertain about tariff policies' long-run impact continues to be about double what it was in the spring. And finally, in a question we started asking in July, would you say that things in the U.S. today are generally headed in the right direction or on the wrong track? 2/3 of the respondents still say that things in the U.S. are headed on the right track. That's down slightly from most of the previous surveys were above 70%. On behalf of the Center for Commercial Agriculture, I'm James Mintert. Thanks for joining us today.